I'm John Duff, NSP Strategic Business Director, and this is a special policy update. We're wrapping up a series of podcasts on risk management. This will be the sixth installment in this series. It was, of course, a partnership between National Sorghum Producers and the Risk Management Agency, really bringing education to farmers on crop insurance and other marketing and risk management issues as it relates to sorghum production and really grain production generally. With the markets the way they are, bad, especially over the last few days, this topic is just as important now as ever as we're getting ready to put a crop in the ground. So focusing specifically on crop insurance today is going to be Tom Sell. Many of you know Tom Sell and have visited with him, have heard from him, have worked with him over the years, and he's a tremendous advocate for the U.S. farmer in D.C. and really everywhere else as well. He works really closely with us here at National Sorghum Producers, representing our interests on a number of issues, and it's a real pleasure to welcome him in. So, Tom, welcome. Glad to have you actually here at the office today, and refresh us a little bit on your background.
Thanks, John Duff. It's good to be here, and always fun to be with you. And I like your newer and fancier titles. They're very auspicious. Hey, I have a great privilege of getting to represent agriculture in Washington, D.C. on a general basis, and there are so many issues that our Congress and our administration confront that are important to farmers, that are important to society, and really so many issues that society deals with that really start from the ground up. And, agriculture is something that most Americans, most of the 330 million Americans don't really think about or pay attention to, and quite frankly, they've become spoiled to the expectation that they'll have a diverse, a great kind of cornucopia of options in how they want to feed and clothe themselves at a really affordable rate, the lowest percentage of GDP in the world. In the history of the world, Americans spend on providing their basic needs, and of course a lot of that is owing to the incredible, dynamic, efficient work of the American farmer. It's a good thing. A lot of people complain that people don't know where their milk comes from, or they think it comes from a carton in the grocery store, and we all kind of throw off those quips. But what a blessing!
What a blessing
to live in a nation where most of the population doesn't have to know. They just have that expectation. And that's a great thing. That's what we want. Now, that doesn't, we've all got to work to educate the broader population about where the food comes from and the challenges it takes. That we shouldn't just take this for granted. It doesn't happen by accident. There are, a few 100,000 farm families in this nation that are working every year to cultivate the ground to make the next year's crop. Soil health and conservation and doing things in a sustainable way aren't just buzzwords. They're the reality of what's going on in rural America year after year. And so the privilege I have is to be one of the men and women that get to tell that story day after day in Washington, D.C. to make sure we don't adopt any policies that would undermine this incredible system that blesses America each and every day.
Yeah, I think that's a particularly important message today. Was at the store yesterday to get toilet paper, which was out already, not any related to my personal fears of the coronavirus, but it's just, you look around at people that are scared over potentially lack of basic necessities, like not just food, but toilet paper and other basics that we take for granted in this country. And that really, it kind of hit home that fact. And so it's interesting you bring it up today that we are really spoiled in the U.S. of not having to worry about those things. And you have something like the coronavirus. You all of a sudden have people that have never had to worry about that, or even anywhere close to worrying about it, that are kind of worried about that now. And
they
so
are
it's
worried. And with reason. And you can see how kind of the mob or the group reacts when they have a little fear over a coronavirus, which, like, I'm not wanting to minimize that in any way, but certainly the numbers with just over 1,200 cases diagnosed in the U.S. and it really not being even as serious as some other diseases that we've confronted, you just see the reaction when people get nervous and people get scared. The fact that we haven't had to get nervous or scared about our basic food supply in generations, really in the history of the U.S., because of deliberate policy from our nation's beginning by our founding fathers of getting people out and rooted to and investing in and building on the land with strong private property rights so that they are incentivized to make it better every year. I mean, this system has been very deliberate from the beginning. And I'm not saying it's perfect. I mean, we could have a blight of some sort, but we've also got great investment in research and through the nation's land grants and through USDA and ARS to try and attack this potential problem from all sides. The goal of good farm policy is that people can worry about other things than other than where their food is coming from and having plenty to feed the first energy needs which we have, which are the calories to keep our bodies and our brains going. So we really are blessed to live in this nation, and again, I'm just proud to get to represent this agricultural system that allows us to worry about a lot of other things.
So you've been in that role of representative and advocate for the U.S. farmer now for 25 years. You first went to D.C. in 1995, is that right?
Old, Mr.
95.
95, yeah.
Talk about that. Talk about how you got up there and kind of your start up in D.C.
Yeah, I went as I grew up, and we would have great kind of dinner time discussions. My father was a banker about policy, and I loved it. I watched Crossfire as a kid, and loved kind of the clash of ideas, and I love the goals of policy, which are to create a playing field and an environment where businesses and citizens can succeed. So I've always been attracted to kind of policy debates and arguments and the clash of ideas there. And I studied ag economics at Tech and was getting toward my senior year and didn't really know what I wanted to do. And there was an internship that was offered, one per semester by Texas Tech University at the time, with our local congressman, who at the time was a great guy named Larry Combest, who obviously I could talk for days about our relationship. But I won that internship, and that really set it off. So that was the spring of '95 or January '95. Stayed up there the summer with Pat Roberts and the House Agriculture Committee that was beginning its work on what became the '96 Farm Bill. Not that I want to take any ownership of that particular Farm Bill. Just kidding. It did some good things. So then came back, graduated, started courting my wife, and so everything was providential. Went back up to D.C. I actually had two choices. I could go back to Groover, Texas, Maggie, and I was either going to work at the Cargill feedlots up there, and that was close to where my now wife was at the time, or go back to D.C. as a low-ranking staffer on Capitol Hill. And Kyla, my wife, said, well, I can tell you one thing, Tom, if you move back to Groover and start working as a cowboy up here, I'm not going to marry you. So your better chances if you go to D.C.
But really, there was a third dimension in there too, right? Because she was going to be a missionary. Isn't that right?
She was. Yeah, she was raising money to go on staff with Campus Crusade for Christ. She was going to go to South America. She has a heart. She's a devout and very faithful person and loves to share that good news, and so that was her heart at the time. But so I was competing with God in a sense. Not really.
So it was God, Groover, DC.
I suppose so.
So went to DC, and then you just whether it was God's providence or good timing or your intelligence or whatever, you ended up working on a number of really, really consequential things pretty early. Within 4 or 5 years, there was a key crop insurance bill, and talk about those things.
I think we can certainly say it was those first two, not the last. But Combest really developed a trust with me, and I was working hard, and I knew what I didn't know. But I think I had a good way with people, and a great patience for I love the conflict of ideas. Some people get really nervous when that happens. I think it's necessary and needed, and so I just kind of revel when I disagree with someone. We can argue and be great friends.
Yeah.
And I think that's a good recipe for D.C., for anyone who goes to D.C., and I just really loved the work. And, of course, it was a tough time in agriculture, not unlike what we're experiencing today. We had the '96 Farm Bill in place, which what good it did was it kind of unshackled the American farmer from the old dictates of the old farm program, where USDA actually tried to match supply with demand by telling farmers how much they could plant and where of what crop. And so we lost out on a lot of market opportunities as an industry. So freedom to farm did that unshackling. The problem was it didn't leave a safety net. It was done at a time when prices were pretty high, 96, 95 and 96, and you had economists all over the nation saying, whoa, we're at a new plateau of prices because China's finally coming online, and you had all this optimism. Then, of course, that plateau, there is always another side to the plateau.
Totally.
So we fell off the backside with no safety net, and that's really where Combest came in and said, we're going to do two things. One, ad hoc assistance for farmers is not ideal because the farmer can't plan on it. They can't make plans for their farm, and they're constantly having to wonder, is DC going to come through and bail them out? And that creates a lot of inefficiency in the micro level at the farm level. So we need to reform that. We need to invest in crop insurance, invest a little money in crop insurance so that a farmer can control his own destiny. He has a contract in front of him, and he knows if he makes less than this amount for whatever reason, he's going to be indemnified. He has a legal contract saying so. So he can build that efficiency into his business and use his money, use his capital to take other risks if he can set aside part of the risk through crop insurance. So we had to make it affordable and more available. We had to address more crops. We had to increase buy-up levels, and those were really the goals of the ARPA bill that we passed in 2000. And it was kind of a watershed bill. And then right after that, Combest's other notion was we've also got to do something to restore the safety net to the Farm Bill in terms of price risk. And so that's where we came back in with the countercyclical programs and the O2 Farm Bill, the target prices that then created a safety net that were able to provide some needed resource. We also bumped up the marketing loans a little bit at the time, so that there was a true safety net there on top of the direct payments. And we maintained all the flexibility, all the market-based reforms of the 1996 Act. In fact, we added some with like the peanut quota buyout and tobacco quota buyout, moving those programs to more market-based as well. So it was really a remarkable farm bill and a remarkable time as a young man. I had interned at the Ag Committee, like I said, right out of in my senior year of college at the age of 22, and less than 3 years later, I was back as kind of Combest's right-hand man and managing this staff of 50 people, many of whom had looked upon me as an intern just 3 years earlier. So it was a pretty wild time, but I tell you, I loved it, and we all worked hard and were able to accomplish some good things.
So a couple directions I want to go there. After that, I want to get a little deeper into some of the developments of crop insurance the last 10 to 15 years, and also want to talk about your mentorship of interns and young folks in DC. But before we go there, I want to back up a little bit. Give me a really, really high-level overview of crop insurance itself. So the rewrite was watershed, because crop insurance as it exists today really didn't exist 20 years ago in the multifaceted, comprehensive program that really covers farmers that exists today. Yeah. So talk a little bit about that history. Where did that start back in the days of hail insurance? How did all that start, and then how did that evolve to where we are in 2000 in this conversation now?
Yeah. It's a great question, and really it's an interesting story. So, federal crop insurance was first authorized in the New Deal era acts. So in 32, 33, 35, 49, there was a series of organic statutes, or organic in terms of, this is the basis of our farm law today. Not organic, like no pesticides. No, that's right. Yeah, different. Sorry about that. Bring some Washington vernacular in, but. These are the core statutes, and it was the Agricultural Adjustment Act and then others. So it's what, originally our farm program started with a conservation component, because the Dust Bowl was was creeping as the farm bill as the original farm bills were being done, and we were just farming too much. We were coming off the mechanical revolution, where the micro response for a farmer when the price of wheat halved from one year to the next was, well, I've now got this new tractor and I can farm twice as much land, so I'm going to maintain my revenue by going. And which then just further floods the market with more commodity, which was not needed at the time. So we had piles rotting in the field. It was just a really sad thing, and we had too much land, and some of our most fragile lands that had been ripped up and cultivated in that time. So the original farm programs were all coupled with this conservation aspect, which was also supply control. And so that was a big part of the program. And then those original statutes also authorized federal crop insurance. Well, it was a very, very different model from what we know now, and it was all supposed to be done by the federal government. They never put their full resources into federal crop insurance, and where they did and where they tried, it was often fraught with abuse and scandal. Right? People planting corn in the middle of highways to and just stuff. In fact, when I first went to Washington,
did that really happen?
I don't know. It's just kind of the talk. I was told. So in this congressional district where we're sitting, there have been 5 congressmen now: Jody Arrington, currently Randy Nagelbauer, Larry Combest, Kent Hance, and George Mahon, who served as appropriations chair in Washington D.C. for years and years as a Democratic chair. And Mahon just, from what I'm told, just hated federal crop insurance. He thought it was the worst program ever because of the abuse that had been seen. So it really had a bad reputation. But all that to say, in the Jimmy Carter era, the USDA, the secretary at that time, had an interest and thought that crop insurance could be made to work. And actually, Benjamin Franklin wrote on the need for crop insurance because when losses occur in agriculture, they tend to occur heavy in a certain area. So underwriters in the normal insurance world don't love it, right? Because you can insure all the cars in Lubbock or all the ships on the ocean, and you can kind of note that there will be a percentage that we think will have an accident over the course of the next year, and we can build actuarial tables around that. With crops, it just doesn't work that way. You'll have 1 year out of multiple years, but you have heavy losses in that year, and then you got to make up for it over time. So normal insurance wasn't built to manage that kind of risk at the time. So even Ben Franklin talked about how you needed to pool risk over time and have a big underwriter like the federal government to help manage this. So it has this long history, but like I said, sorry for rabbit trailing, but getting back, it didn't really work well until that in the Carter era, the secretary was I think it was Berglund from Minnesota. He started talking about it and was working with some of the companies that are actually still rooted in that Minnesota area, and they started investing in it. And it takes time. Everything in Washington D.C. takes time, but you had people talking about we need to make new investments. And really, there was an act in 1980 that was seminal to try and reform federal crop insurance. And the key change that it made was it allowed for a partnership with private entities. And particularly, it no longer relied on FSA or what at the time was ASCS to deliver the program as kind of another thing relative to the farm program that didn't work very well, but it authorized the use of private agencies. So you started to cultivate this class of people out there who were interested in selling and marketing federal crop insurance. So the 80 Act was seminal in that it set up this partnership between private interests, AIPs, companies like, today we have RCIS and NAU and ARMTech here in Lubbock and ProAg up in Amarillo. And 16 others, or 16 in total across the nation. So it set up the framework for that, set up the framework for private agents. Then in 1994, this was working well enough by this time through the kind of incentives created in the 1980 model that in 1994, Congress decided they did a 94 crop insurance rewrite, and it created like the catastrophic insurance and had some other kind of seminal things that were helpful that really broadened who was going to participate in federal crop insurance. So the framework was all there by the time we came around in 2000.
What were participation levels at that time?
They were pretty low. So I think the total, overall participation in terms of row crop, just traditional row crop covered at the time, was between 50 and 60%. Today it's over 90, and it has been for the last. Really, we finally ramped up after the 2000 Farm Bill, and by 2005 we've been at this kind of virtually all the row crops in the nation are covered. But at that time, in that 50 to 60%, and the buy-up levels were very low, between 50 and 60%. But the framework was there, and even it was in 97. So one of the other things the 94 Act did was it set up a framework to allow for the development of new policies. And Art Barnaby out of Kansas State University worked with Rick Gibson, who at the time was with AMAG Insurance Company, and they developed the CRC policy, the revenue policy. And that was big, and that was starting to gain some traction. So everything was trending right by the time we came around in 2000, where a guy like Combest could say, ad hoc assistance isn't ideal. Couldn't we invest this in crop insurance, create better incentives to buy higher levels? We also put some safeguards in there to prevent fraud and abuse, and we really doubled down on that in the 2000 Farm Bill, or in the 2000 ARPA bill, to make the program just to maintain the integrity of the program, because nothing can do more to undermine the political success of the program than stories of fraud and abuse.
Yeah.
So that was one of our key focuses, but primarily for the farmers' benefit, subsidizing the higher levels of buy-up and doubling down on the system to create new policies to cover more crops across the nation, which helps politically as well. So, but the fact that the system had advanced enough through the 9480 and 94 legislation and development of products like CRC that we could have the confidence to say it's time to invest in a big way in this program and finally make this transition away from ad hoc assistance. That speaks to the good work of a lot of people who came before we did, and it made passing the 2000 ARPA, it was a significant accomplishment, but it wouldn't have happened had not the good work been done prior to that. But from 2000 ARPA, a lot of new policies, a lot more participation. We've gone from a program that, our baseline when we wrote the 2000 ARPA, the federal government was spending about $1.5 billion a year in federal crop insurance, mainly in subsidies and the underwriting. And we had $7 billion to add into the program. We invested it strategically, but then the program blossomed. Now it's spending about $8 billion, about $4.5 billion of that is through the premium cost share assistance. So the federal government picks up, anywhere, depending on the level of the policy, between 50 and 65% of the tab. The farmer pays the rest out of pocket, which is, those are significant premiums. This
Absolutely.
is expensive stuff. So, it's not unusual to have a farmer with a premium for his yearly crop insurance that is in the tens of thousands and even six figures in some cases. But it provides very reliable protection, so it has great value. And people like to talk about what is the value of insurance. Is it just the indemnities? Do they get more money back over time? Indemnity is important, and the reliability of that indemnity is important. But the great value, as I see it, is when you offset that risk, when you no longer have to have sleepless nights thinking if you lose a crop, that also allows you to invest in, use that capital, use that money to invest in better tractors, better seed, better equipment, so that you can get in and out of the field faster, which actually has another complementary effect of it reduces the risk in agriculture. If you can cover more ground more quickly. So it's really been neat to see U.S. agriculture take off in the last 25 years. We're becoming more productive all the time, more efficient, taking better care of the soil and the resources around it. And I owe a lot of that. I think a lot of that you can trace back to the security that federal crop insurance provides for the farmer.
So, okay, let's talk kind of modern history then. at this point. We've got about all the flexibility, all the programs, all the products you almost feel like you could want. And we seem to continue to have innovation. And I think that's a testament really to the delivery system we have, where you have a lot of private folks involved that are helping move things forward and have a competitive reason to do so. So talk about some of those developments we've seen over the past 10 to 15 years in crop insurance, starting 20, 25 years ago with revenue coverage and then now growing into all kinds of products today. Talk about those.
Yeah, it is. And I tell you, the biggest complaint I hear about crop insurance these days is that there's just too many options. I don't have time to sit down and I feel like I may be missing out on something. And of course, my answer to that is always, well, one, find a good agent who can boil it down to what could work well for you and really knows their business. But then, don't get too distracted. Take care of your needs. That's what you really need to do. These things, they cost money, and so there's no promises. The question is, does it help you manage your risk so that you can do a better job marketing or do a better job farming? There are the revenue product was seminal and was revolutionary, CRC, and everyone should still thank Rick Gibson and Art Barnaby for developing that. And that has carried forward. I mean, it kind of dominates the field now, and those crops that don't have revenue products, oftentimes they want them, and they've even built indexes off of corn and beans and the commodities that trade better and have a lot of data around that to kind of tie it to their particular crop. So those have continued to proliferate. But then there are other products that are developed, like whole farm revenue, where you group all your crops grown into a bundle, and if it's more diverse, you actually get credited for that, and can insure the whole farm revenue that would go on your farm. It's a really interesting product. There are products that now try and cover the deductible. In crop insurance, we have big deductibles. You think about it or most non-farmer listeners would think about deductibles on a house or on something like that, in the maybe 1% of the house's value, or something like maybe 2% if they want to save some money. In federal crop insurance, the minimum standard deductible is 15%. And that's going to be very expensive. The average, most farmers now are purchasing in that between 65 to 70% of their yield.
85 would be very rare in the sorghum belt.
Oh, certainly.
Because the cost.
We're higher risk area, right? So it's just going to be rated higher, and it's going to cost more. But not that those rates are always a controversial matter, and USDA RMA works hard to get those rates right, and there's a ton of data out there that those have to be based off of, and so there's always room for argument over whether they are getting those right. But a point being, there are now products to try and cover some of that deductible, maybe through grouping the risk together, so you kind of couple yourself with all the farmers in the county and get a cheaper coverage, but that can cover a higher level of that deductible. There are a lot of new developments that come across every year, and I think that is important, John. Why it's important to note, and it's important for farmers to try and keep up. But just the fact of the matter is, the only way they can really do that is with a really good agent who's doing all the homework needed to keep up with the new products that are out there and inform their customers on it. And we're in sales season now. I think March 16th, and probably it will have closed by the time this podcast airs on Monday the 16th. But every agent I know and every farmer I know is taking time to sit down and go through these options. And it's a little bit laborious, but it's so important to the economic success and the financial success of the farm that the folks are taking time to do it.
Well, thanks for that exposition on the history of crop insurance and where we're at today. That was probably deeper than I've gone on a few of those issues. You piqued my interest on a few things, so thanks for that. Let's wrap up and talk a little bit about your mentorship of young folks, myself included, in the last, really, probably your entire career. I would assume, knowing you, that you started really early in mentoring the next generation, probably as soon as you had an intern hat. As soon as your intern hat was off, I imagine, knowing you, that you were mentoring young people. So talk a little bit about that and what that's meant for your ability to really advocate well for the farmer.
Yeah, well, it's fun now at 47 years of age, and having gotten to the Ag Committee early as a 25-year-old. We always had internship programs there, and so I've gotten to be a part of the career of many young people who have stayed and been attracted to advocacy for agriculture. And it's a different ballgame now in Washington, D.C. than it was 20 years ago. When I was first on the Hill, myself and a guy who actually works in our shop now, Jeff Harrison, who's just he's a brilliant guy in Washington, D.C. Yep. We were a couple young Ag LAs when being an Ag LA wasn't that cool. And we started a little group called Locamos Porcos. We were trying to kind of feed off and it was kind of a supper club that would get together and talk ag policy. And we'd have kind of the luminaries of the day have dinner with us when they came to Washington, D.C. Just trying to really say there's something really cool and really fun and really important about agricultural policy. And we've always taken that approach with young people that we've been privileged to get to work with. And I think, folks who are around me, they know, I just put everything on the table and always very humble in the way that, we kind of share work, and it's all about kind of passing it on and building kind of a mantra around the importance of agriculture. So, a lot of folks in the crop insurance industry have served as interns or things through the past. Even, when I had a great run with Combest in Washington, D.C. In his 4 years as chairman, then he retired. I went down to USDA and had a great but brief stint at USDA in the Bush administration before deciding to move back and go to law school at Texas Tech in my home area, but then got pulled back into the ag policy work. Actually formed a little LLC with Combest. We had a partnership and started doing advocacy work professionally as registered lobbyists. And even in that, the bulk of the work you do there is simple education and coalition building or encouraging people to stand up for what they believe to be right, and helping people gather together and coalesce around a message and pick smart fights in Washington, D.C. And so in that work, we've always, from the beginning, kind of built a system to utilize the great resources at Texas Tech University. They have some great, whether it's their meat judging teams or just their ag eco students like yourself. It's a great supply of hardworking, classic West Texas hardworking, slightly stubborn people, all important traits for being a good advocate in Washington, D.C. And so it's been really fun and gratifying to see some of our a high percentage of folks who've been able to come through our operation or that we've had interaction with go on to great things in D.C. Now D.C. is dotted with people who we've had the privilege of getting to work with through the years, so it is very gratifying.
Well, that's a great last word. Thank you, Tom, for everything you do, and thanks for joining me today.